Welcome back, everybody, to another episode of Irresponsibly Long. Eric is back.
I'm back. I'm bright now.
He's back. He's bright. He's got a baby.
Yeah, dude. I added some big things in my life. I added a daughter. I added a new light for the podcast. Yeah, that's in order of importance. This is the longest break I think I've taken from being dialed in on markets. So, and that's been kind of nice. But I need you to catch me up, dude. Seems like a lot's going on.
Well, fortunately for you, I'm so dialed in that I think I'm getting like heart palpitations or something. So maybe we need to dial it back a little bit. All right. So last week, we basically replaced you with a Magic Lines weekly video. I don't know if you saw. So just gave the crowd a little sneak peek at some of the...
It was a teaser for Magic Lines?
I think I basically gave them the whole entire weekly video. I made it free and I made it a podcast episode.
Awesome.
So a lot happened in that video. We were calling for $1,500 ETH, and that happened.
Nice call.
Yeah. So while you were gone, Monday we had it was Tuesday. So Tuesday was Liberation Day, right? Right. So
yeah, I'm feeling very, very liberated.
So yeah, I think I recorded the pod on Monday, if I'm not mistaken. So Tuesday we were liberated of all things. I was camped out in front of my screen, hovering over the green and red button, just kind of waiting to see what was going to happen. And it was kind of a wild one.
Did you sell the news like you had sort of like explained to me a week prior, where it's like if he goes forward with the tariffs, then it's an easy sell?
I was flat going into the event, and I told myself actually that I wasn't going to trade it going right up to it. And then I was like listening, and it's actually been my experience lately that you've been able to trade these events pretty easily, like especially if you're like a small account, right? Because there's people that have to get into or out of like multi-billion-dollar positions, right, on the basis of whatever Trump said in this press conference, and he said it after market hours. So even if you're sitting there with a multi-million-dollar trading account, like you can kind of just zip in and out of stuff. It's kind of a bit of a nimble advantage you have. And if you're trading 5-figure positions or whatever, then certainly you could just click the market button and everything's chill. So it was kind of a wild ride trading the press conference. So in the middle of the press conference, everything started pumping. And like he hadn't really said anything crazy yet. And I was like, what the hell is going on? And then, I'm in some side chats with some finance friends, and one of them leaked this. Well, they didn't leak it. They showed this Wall Street Journal headline that had just come out, where the Wall Street Journal was saying Trump has just announced like a blanket 10% tariff on everybody. And the market started turbo pumping because 10% was the bullish.
It's like the low end of the range. Yeah.
Yeah. So that was the bullish end of the range there. So I was listening, and I'm pretty sure I had like a pretty fast stream, and nothing had really come up yet. So I didn't take any position. And then sometime in the middle of the press conference, he brings out the giant Kinko's poster board, right? There's this guy and his freaking visual aids. And then somebody in my group like shared like a zoomed in screenshot of it. And you saw like all the numbers, like it was like China 54% or whatever, right?
Yeah, way higher than 10.
Yeah, it was sort of consensus to the people I was talking to that did 20% was going to be like the nuke, like 20% was like nuke territory, 10% we pumped, so maybe 15% was the market was going to chill. So these numbers in aggregate were like way higher than 20. So immediately, me and like all the other boys in the chat were just like, start selling.
Sell everything.
It was an interesting spot because I was basically like, okay, I can just short as much Ethereum as humanly possible here, and I'm just like not going to get liquidated because it's going to go down. So yeah, I put a message out to the Discord. I'm like, market shorting, sell it all. And so we got a pretty nasty move down to the high 1600s, low 1700s. I took off a little bit of the trade. Like I thought it was going a lot lower. And then all week, it was a very frustrating time for me because the market opened down like 5% the next day. We had another 5% day. We had multiple like negative 5% days. And we closed the week with that like bloodbath on Friday. And like ETH didn't move from that low and Bitcoin didn't move. It was just like totally crushing the NASDAQ. And I'm sitting there on Saturday, like, oh God, I have this like huge freaking position on. And I also feel like a lot of the selling is kind of over, at least in the short term on stocks. So I was like, I'm gonna close out my short because like I don't want to have one of these illiquid like weekend pumps. Just like I was sitting on like a pretty fat unrealized P&L, so I close it out, and then I wake up the next day and just ETH turbo nukes. It nukes like 16%,
Oh, so
and
you left a lot of
I
profits on the table.
left an ungodly amount of profit on the table, dude. Like would have been my largest trade of all time. Just the second half of that trade, like it was so bad, like just an enormous P&L. And I felt super bad because I told the guys in the group to close too. And I was just like, oh God, it just,
it's scary
brutal,
though, like being
brutal
short in moments like it's scary being short when they're in the vol so high because it can just like easily whip back and sort of melt your face too.
Yeah, for sure. And that was kind of what I was worried about. I'm just like, look, we're like the market wants to go up so badly, right? We're so oversold on like all of these technical metrics. Like one tweet, like, is he going to do one of these Sunday AM tweets again and just like turbo it back up? Like, I don't know. It feels very uncomfortable to be short. We had the huge move, caught a lot of the move. Unfortunately, crypto didn't die in the same way. I actually just shorted stocks the whole way down. I would have made more money, ironically.
Yeah, that's weird.
But here we are. It's Tuesday. Is today Tuesday? I have no idea anymore. It's Tuesday as we're recording this. So Jim Cramer predicted a bloodbath yesterday, and the market ended up ripping. So good job, Jim.
That was like a bounce, and I don't know. Do you feel like that's going to be short lived? Because I'm reluctant to shove in here. I do.
Well, we opened and we're up 4.5% or so today. And as I look at it now, we're down 1.5.
Yeah, red again.
Just trillions of dollars being like added and evaporated to these markets, like within like minutes sometimes. I'm trying to think if this is the craziest stuff. It's not the craziest stuff I've ever experienced in the markets. Like the craziest time for me in the markets was still trading emerging market bonds on the Bridgewater desk back in like 2008. Those are wild times, like trying to move like illiquid Argentinian debt while the entire world collapsed. I think we had like a 50% drawdown or something during the GFC, right? More.
Yeah.
So those were wilder times, but not by much. And the 2-day sell-off we had last week was just still one of the top down moves in the history of the stock market. And I think Trump now has the dubious honor of virtually all of the worst stock market days in history. Like nine of the worst 10 days in history are like Trump or something. Or it's like he's got like 70 or 80% of the worst days in history. So it's pretty crazy. So yeah, I've been trading these moves, trying to digest it, and trying to balance the sort of short-term moves with, I'm starting to think now more about like the long-term investing. Listeners of this pod probably aware that we've been kind of bearish for a while. You've been very cash heavy. I've been very cash heavy. I've been very long bonds. Last week, actually, we called out a levered bond trade, and then like the next day, that trade just mooned like after the tariffs, but ended up getting out of the bonds. And
dude, I was just gonna say, like, I'm long like the 7 to 10 year, I'm long the 20 year, and those aren't really moving in the direction I want right now.
No, they're not. And I still have like a good amount of cash, right? A lot of my cash was further out on the curve because I was long TLT and I was long like some levered TLT, and that trade did pretty well. But we took like a hit, and I sort of realized that this like long duration stuff isn't exactly betting on the stuff that I want to bet on. And like as you go out the curve, there's like all these other factors that
there's so many variables
come into play, right? What's inflation going to do in the future? Is China just going to start dumping bonds? Like who knows, right? And if you're on the shorter end of the curve, you're basically just like, is the Fed going to cut rates? Is the Fed going to cut rates more than the market is currently pricing?
You can like, I guess like levering up on that more of a sure bet is probably like probably a safer way to play it than just going like irresponsibly long the long end.
Yeah, and I don't even want to lever that right now. Like I'm basically just in a 2-year treasury bond fund. That's like what I'm in for my cash at the moment.
Yeah. And what's that paying?
4 percent, four something,
Yeah.
four and some change. So in my mind, like what's mattered is just that like I've gotten like relatively richer, right?
Yeah, especially just not losing money is like step one. And that's how I feel. It's kind of like a luxury position to be able to like not look at the markets. And it's like, which what you said, I got lucky kind of. I went cash heavy at the perfect time, like before all this popped off. And now I have the luxury to just like sit and wait and process. And I don't know. I'm not really feeling like I want to be buying yet.
Yeah, so let's talk about that a little bit because I think that's an interesting discussion. One thing I've been telling the guys in the Discord is that we have to sort of bifurcate our time frames here into extremely narrow windows and really long-term windows. Like even trading, like taking like a 1 week position feels terrible, right? Like you can day trade, you could scalp, that's chill, but like I think you got to do that and just like grab moves and get the hell out, or just start zooming way out, right?
Yeah, that's
I think
hard.
when you zoom
hard
way out,
I think that's hard for magic lines, right? For your job now is like you're talking to all of these people, right? Like everybody on these different time horizons, whereas like clients at Scope Wealth are all long-term oriented, and it's like it's much easier.
Yeah, it is hard for me because I'm juggling the day traders, the scalpers, the swing traders, the crypto people, the casuals who are just kind of buying stuff and hoping it goes up in the long run. And there's like different strategies and different messages for all these things, right? But I haven't done much in my long-term portfolio for a while, but I decided to buy on Monday. I actually lucked out and basically bottom ticked it. I don't think that's going to be the bottom tick, but
are you talking about
local bottom ticked holds? It. Yeah, I ended up buying a little bit of. Are you familiar with VGT?
Is that a bond? Is that what is that? Vanguard Growth or something?
It's the Vanguard Information Technology Fund. It's got like NVIDIA and just a bunch of tech stuff in it. Yeah. And yeah, I don't know. I've been just like looking for levels to start buying. It's a little tricky, right? You always want to just think in your brain like, oh, I'm just going to shove it all in at the bottom, but it doesn't work that way. So as far as VGT went, we basically were down 30% from the top and we tagged the prior all-time high. So I was like, look, this is a good level to buy something. Like anytime you're 30% down on really good names, you're tagging like a prior all-time high. Like this is a level we traded December 2021. Yeah. I mean, I feel okay shoving some in there. I've been kind of
I think this is probably cap weighted
rule of three thing. Sorry.
What's the rule of three?
The rule of three is like when you're trying to sell the top by the bottom, I like to do it in threes. So you sell one tranche. You're usually a little bit early, right? You kind of know that you're going to be a little bit early, right? And then you fire off another one, and that usually ends up being closer, if not, exactly at the top. And then you fire off your last bullet, when the move is like really clear and it's definitely moving in that direction. And by doing that, like I feel like you end up getting reasonably close to like sort of like an average price that you're happy with. So long as you don't do this in like a 3-day period, like it's best done like over the course of like weeks.
Yeah,
at least.
I actually like that. Because I don't use like the DCA method, which is like just trickle it in sort of forever. I actually like doing it the way you're describing, where it's like once I identify that I want to start buying, then I sort of tranche it out that way. Mm-hmm. But to your point, like, I'm just looking at a time like this is like an opportunity to acquire great assets that had been like so expensive for so long, and you can just get them for pretty cheap. And I'm looking at like the forward earnings multiples on things like Google around like 15 times, or NVIDIA at like 18 times, Meta at 18 times forward estimates. And if you use forward estimates, it's risky because it's a forecast, but it's also like cheap enough where you're like, dude, this is still very good. And I'm still just kind of getting greedy. I want cheaper, but I think it's reasonable.
Yeah. We all want cheaper, and yeah, we might get it. I mean, we have no idea how far the orange man's going to take this. I mean, we're basically witnessing just the greatest game of financial chicken that's ever played out right now.
Yeah.
I don't know if you saw it today, but China responded to the tariffs. They retaliated after the Trump admin was like, "Do not retaliate, do not retaliate." So China announced, retaliatory measures against the U.S. And then Trump came out today and was like, "All right, you want 52% tariffs? Boom, 104% tariffs, doubled them."
Right. Yeah.
So that caused the nuke today. That's when we went from up, nearly 5% to down nearly 2 on the day. That was the catalyst for that. So this is kind of like an escalate to de-escalate thing, which is always a dangerous game to play. But that does seem to be the generalized philosophy of Trump and everything that he does.
Yeah. I mean, I mentioned this in the Discord probably several times, but I'll say it again. Like, it's always been my strategy as an investor to sort of ignore macro and just buy companies that are good companies that generate cash flows, that will generate cash flows regardless of what type of like macro environment is happening. And I think all of these like Mag 7s, there is a narrative to suggest that their forward cash flows are at risk. But I think for the most part, like, there's no tariffs on digital advertisements, so I'm fine with that.
Yeah, but obviously the companies that buy the ads, if they don't make profits,
if we go into a recession, then that's probably the first thing to get cut. Yeah, I mean, there's always like risk, but I think this is just, the market's also forward looking, right? It's like some of this is being priced in right now, so I think that's fair too.
So quaint looking at this chart and seeing the little box we drew a few episodes ago. It's just because we had a conversation about shorting up here, and I did end up shorting. That did end up being the top. Didn't have the balls to hold the entire size all the way down because it's always tough to do that. But whew, what a tumble. But yeah, you can see NASDAQ basically tagged all-time highs. S&P hasn't done so yet. One of the interesting things I've pointed people to on the S&P is the 200 week, which I feel like is a pretty good metric. Like, basically since the GFC, the 200 week has been like a screaming buy. COVID underwater for a little bit, but like pretty quickly above buy. Tapped it here, back up, tapped it here, back up. So we're approaching basically like prior all-time high and 200 week on the S&P. I mean, it's a pretty huge technical level. It's definitely a place where we could bottom. And look, I think if you're like a long-term minded guy, I think you just have to deploy some capital here, because we are just like a couple tweets away from this being like over. And then I think we maybe have a different set of problems down the road, but this particular phase of the bear would maybe be done.
Yeah, and nothing's like, you can't just look at history and be like, this will be the same. But I mean, COVID taught me that these things can reverse really quickly, because COVID was like an obvious time where we were going into like a recession or worse, and the market recovered in like 30 days. Maybe you just got to, I mean, at least what you're saying is right now you get the confluence of the 200 day or 200 week even, and the previous all-time high or the previous high, and then that can at least be your first tranche. I like that.
Yeah, it seems as good as anything. I'm debating like how much stock I actually want to buy. Like, in my mind, I can buy stocks or I can buy Bitcoin. Those are kind of my two longer term things. Bonds are interesting for trades, maybe if you're trying to bet on the actual Armageddon coming that's going to ultimately force like Jay Powell's hand. But for long term, obviously we don't want to own bonds. How are you thinking about stocks versus Bitcoin right now?
With those two assets, I like both. I mean, I like sort of like stocks that create cash flows over a long period of time. I like that, the compounders. And I like Bitcoin, of course. I'm just like a little wary of like taking that game further, where you just try to get more beta, because like as you step further out on the risk curve, there's less certainty. I think like you could say, well, if you want to buy Bitcoin, why not start buying Fartcoin? Or, you can just take that out forever. And that is not appealing to me. But stocks versus Bitcoin, I'm interested in both.
I'm a lot more interested in Bitcoin. I think that stocks like there's a lot of like path dependency here for stocks. There's a lot of variables that could go one way or another that could make stocks kind of a screaming buy, or not. It also feels like stocks and Bitcoin are sort of at like different stages of their kind of generational cycles. Like I feel in some sense that stocks are at like maybe they're potentially at the end of like an era, because it does seem that the Trump admin is very serious about leveling out the economy, basically rectifying the gigantic difference in gains over the last decade or two in labor versus capital, right?
Yeah.
It seemed very labor focused. And a huge chunk of Trump's base doesn't own stocks. They don't care if the stock market goes down. They want their wages to go up, and they want to be able to afford housing, right? Those are kind of like mega huge things for them. And a lot of people are like, well, these tariffs, they're going to make goods more expensive, and they're going to be mad, but how much will the prices go up? And then like, how much do you care about those prices going up? Like, did your wages go up? Did like more jobs come into your hometown? Is a house 50% cheaper than it was before, right? Because that would rectify like a whole lot of stuff, right? So do we eliminate income tax for you under 150K? So many different variables like swimming around, and it seems like everybody right now is basically just like a armchair tariff expert on Twitter, right? And there's just this overwhelming consensus, right? Overwhelming consensus that everything being done is really bad, right? I don't know about the circles you run in, but in the circles I run in, like there's not a lot of people like who think that what the Trump admin is doing is like economically a good idea. Would you agree with that?
Yeah, I think that's accurate.
Yeah. So as like a trader, like my antenna always like perk up when I just like everybody is on one side of the boat. It kind of reminds me of late 2022, right before we started basically ripping.
Right, you were sort of one of the first bulls in that case, just sort of taking the other side.
It's just like everybody was bearish. Everybody was just pounding macro podcasts and shorting everything. And at a certain point, positioning matters. What's priced in matters. Markets price things in. You have to be thinking about whether this is, at least in the short term, overblown. And I do think in the short term it probably is. And I think there's a pretty high chance of like a pretty large tradable bounce in the short run here.
I want to point out something though. Like, so you're looking at stocks, and I agree that I think I heard Scott Bessent say something to the effect of like, we don't care about Wall Street, we care about helping Main Street or something. And
it's a Mag 7 problem, not a MAGA problem. I think
yeah, that was awesome.
Really gangster quote.
Pretty awesome quote. I mean, it's not awesome for me as a stock investor, but
yeah,
like what I go back to all the time is like, stocks to me aren't just like this market trading vehicle. It's like stocks represent businesses. And like when you think about businesses, there are good businesses that sell widgets that people want, and people are going to continue to want the widgets and services from these great businesses. I feel okay buying the stocks of great businesses. I think like, can the multiples compress more? Sure. But I think the businesses, like the fundamentals of the business, are going to be fine, of the good ones. And it's like my job to pick the good ones, to find the good ones that are going to have sustainable cash flows.
Do you have a strong opinion on why the Trump admin is doing what they're doing, what their end goal actually is?
Besson, I think we were talking about the same interview, one with Tucker Carlson. He kind of mentioned 3 points, and the third one I found most interesting, that he was saying that we want to like he said we want to like move people out of the public sector towards the private sector, and then we want to re-lever the private sector. And I found that interesting because I feel like, moving people out of the public sector is going to decrease our spending. Like we want to decrease the government deficit and government debt level, and moving people into private jobs and helping companies like by decreasing interest rates and helping companies like invest in infrastructure again. I feel like that seems like their agenda, but there also seems to be like maybe a fourth dimension of the chess game that I'm not seeing. It's probably like related to this like Cold War with China.
Mm-hmm. Yeah, I think the China element is a very underrated element of what's going on, probably. I'm not smart enough to understand all of the moving pieces here because there are so many moving pieces, right? We have the trade imbalances, whether you think those are serious or not, manufactured in the US versus not. We have the debt refinancing situation. We have the deficit. We have like all of these little things interacting. We have energy policy. We got foreign wars. We've got obviously a geopolitical conflict with China. There's so many moving pieces, right? So I'm not like one of these people who's sitting on Twitter, like screaming at the sky that like everything that they're doing is obviously bad and is going to blow up, because this kind of feels like a bit of a mid-curve take. I think that if maybe I can just kind of mentally work this out with you, because I'm trying to think of everything just from like a game theory kind of perspective. Like, who are the players involved and what are their motivations? What are their incentives and what kind of constraints are they operating within? Trump, his motivations are always a little bit unclear. It's clear that he likes doing deals. It's clear that he likes feeling important, that he views himself as like a great guy, wants to be like a great president. I think he actually does want to go down in history as the greatest president of all time. I think he does like the fact that tariffs are this like mechanism for him to have this like, what I would say is like an unhealthy degree of like personal power, right? Like this one man can basically influence the entire world economy without having to answer to Congress or anything like that, right? And that's kind of crazy, but it's obvious like why he might like that. Like he has everybody just coming to him on bended knee right now. But Trump has constraints, right? And the main constraint he has, I think, revolves around the midterms, because if they don't win the midterms, then his entire agenda is dead in the water. He kind of goes down in history as like a bit of a lame duck president, and nothing that they're trying to do in terms of what I think is, say what you will about it. It is sort of like a grandiose and ballsy attempt at reshaping the world and reshaping America. And I think I have to tip my cap to them to some extent for that, because the current system was just simply not sustainable. Like the status quo was going to break. So why not like seize the opportunity to try to do something great and to go down in history as the person who kind of led that charge. So that all makes sense to me. But if you factor in the midterms, right, that's like the main constraint number one. So we can't be in the depths of hell at the midterms, right? And we can't be at the depths of hell even like with a few month cushion coming into the midterms. Like enough time to run this shit back up, right? And if you think about COVID, like how long did it take them to basically get back above all-time highs?
It was a month.
175 days.
It was
from 100 and about 100, call it 150 days, call it 6 months, right? For safety's sake, right? So if I'm them, I'm like, okay, as long as I'm back to all-time highs 6 months out prior to the election, the momentum is going up. I'm good. Now I'm coasting into the election, probably going above all-time highs, positive momentum, right? So that would put us at like April, May of next year is maybe like the absolute nadir of.
Yeah, that has to be the time where it rebounds. I agree, and I think that's why they're moving so fast and breaking things early. I mean, that speaks to the timing of them just flipping the chessboard over now.
And I think the other interesting thing that happens around that time is like I think Powell will be out around then, and I think they'll be replacing him with some sort of pawn. Probably, it seems this administration does not really love the idea of Fed independence, so we can kind of bet on that. So I think as an investor, like if you think through these constraints, like we're in like a very interesting time to be allocating capital. And I think we're very blessed in some way to be going through this time because we have these sort of like knowable inflection points around like which we have kind of perfect information about like what key actors in the markets are going to do and about when they're going to have to do them and what types of things are going to sort of like force their hand to do particular things. And that's super interesting because like you can probably be just shoving like a good chunk of money in and probably honestly be like I plan on being 1.2x long with the whole freaking portfolio, right? At some point next year. That's like that's
sooner for me, probably.
Yeah. By who knows how long this all plays out. Right. But at some point, like that's what I'm planning in my head. It's just like the system is rigged in such a way that you just know what these people have to do. Right. And if they don't do that, they're unsuccessful in doing that. I mean, everything is just everybody's dead at that point anyway.
Well, I like that. I mean, it definitely helps inform your actions in terms of the timing. And it seems like the market has to rebound before then. So I really like that point. Something that I've been thinking about that it's more of an alfalfa topic because I don't know how you play it in the markets, but it started with the Palmer Luckey interview that we dissected on alfalfa. I think you were actually gone for this episode, but
I was, yeah.
Yeah. So Palmer Luckey was talking about how the US, we don't manufacture things that we need. If we were to like go to war, we would run out of missiles in 7 days, and we can't even make them because we make these like highly sophisticated, really expensive missiles when China pumps out these like really shitty ones, but they make a ton of them very quickly. And I think the idea of bringing manufacturing back, it's like something that Palmer Luckey was talking about. He's like, you don't want to seed your leverage by having other people produce the things that you need. I think when everyone's talking about tariffs in terms of bringing manufacturing back, like I don't care if the US makes toasters or like we create t-shirts or something. But I do think it's imperative that we manufacture like high-end silicon and weapons and stuff. And I think that to bring manufacturing back for those things has a cost, right? Because globalization has reduced the costs for everybody, but you have to, for Adam Smith's ideas to work, you kind of have to have everyone playing nice with each other. And what I'm thinking about now is like it's a national security issue to bring manufacturing home for these important industries, and that bears a cost. And I think we should pay that cost.
Yeah, I agree. I think it's probably like a small chunk of the motivation of everything that's happening right now. It's certainly something I think everybody agrees with, right? I think even the staunchest of free trade advocates, believe that there are sort of national security exceptions to the idea of markets, and that being in a spot where you can't manufacture critical drugs or chips that like underlie like all of the fundamental technology of the world or weapons, like this is all very, very bad, right? Different than like having people come back to the US and sew garments and make Nike shoes, probably. Is that the end result? I don't know. Like I'm kind of in the camp right now that everything Trump is doing is so I see people reacting to everything Trump's doing in like these kind of predictable ways. And I just get the vibe that everybody's getting baited. Cause like everything this man does is like troll and bait people. It's just like I've seen this like a freaking 100,000 times. He does something like so unconscionably audacious or stupid or whatever, and everybody just piles on. I can't believe it. But if I'm like thinking through the strategy, it's like that is the crux of the strategy, right? You want to execute like Madman strategy. Like you have to have people truly believe that you're like a madman. And like coming into this, like
you can't tell the opponent what your actual plan is because that ruins the plan.
Yeah. Like the fact that everybody is sort of unanimously bought into this as like this like horrific economically like illiterate thing that's going to like blow up the entire world economy is kind of like a big point in favor of like, yes, you are obviously executing the madman strategy well, because literally everybody does truly believe that you are a madman. Like people are so concerned and screaming at the top of their lungs because they're like, holy shit, he's going to do it. He's going to fire the gun. He's actually going to pull the trigger. Mission accomplished in that regard. But like, what is he doing with that? From like a game theory perspective, right? It's obvious that because of the constraints of the midterms, and because of the general constraints of like a recession, like we can't have like a major sustained recession because everything falls apart, right? Like all of like the deficit is like funded, almost entirely via like stock market revenue. I think like 65% of the revenues for, that the country relies on, like do come from the market, right? So there can't be this like sustained destruction, not just for like the economics of winning the election, but just from our ability to actually like run the country. So that can't happen. That's a constraint. So if you kind of like play that out, there's this like built-in circuit breaker to an extent. And it's also such that because of the way we're positioned in the world versus Europe versus China, like when we hit our breaking point, everybody else is going to be way, 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 way worse off. Like in spite of some of the delusional takes I'm hearing from people where like everybody's going to like ally with China and cut us out of trade. It's just not going to happen. Right. That's just like kind of crazy talk. So then it kind of makes sense that when push comes to shove, like he has an out, right? Like even if it goes horribly wrong, like he always has this like, oh, everybody's going to come to him and be like, I'll take all the tariffs off. And he can just be like, okay, I did it. I removed all tariffs and we have free trade on earth. Right. Like that's going to always be like the kind of like get out of jail free card for him. You're like Yahtzee, 4D chess. I did it. Right. But I think the true goal is probably to just weaken China. Like I think a lot of this is designed to just bring China to its knees, right? And to reorient the world around us. Now, like that doesn't seem immediately apparent yet because we've got like the Europeans and other nations coming to him being like, oh, we'll drop all our tariffs. And the administration is being like, this is not a negotiation. So that's a little bit disconcerting. But we put the screws on China today. We doubled the tariffs after basically tripling the tariffs already. I saw somebody saying that like their container costs, they had ordered like a $4,000 container from China and their order was now $101,000.
Shit. Poor Nick.
Yeah, poor Nick. But also like poor China. I mean, if you check the chart of the yuan today, it's just like absolutely fucking collapsing. Just complete carnage. So be interesting to see where she cries uncle. They announced today they're restricting the exports of rare earth elements, which is very funny because it's like the plot of the last Call of Duty game.
Oh, really?
Yeah. So we'll see where all that ends. But like, I guess the TLDR for investors is like, I think there is some sort of put here. And in the long run, like we're going to make a lot of money by like intelligently deploying capital here. And although we may like be overestimating like how quickly this is over or underestimating how the length of the carnage, I think if we take like a 6 to 9 month mental, like, okay, I'm going to allocate throughout this period of pain over the course of a few years. Like, we're going to be in really, 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 really good shape, I believe. I truly do believe that.
Man, can we talk about a way to play this potentially is through shorting the VIX? Can we talk about that?
I don't know how to short the VIX, Eric. How do you short the VIX?
Well, first let's just talk about the idea. So the VIX, like the CBOE volatility index, has spiked. I mean, we're up at like 50 something. It's gone higher. It's gone higher than 50 something. It's gone 60, 70 probably. But every time that
we tagged 60 last week.
Okay, so every time that it's gone essentially this high, it's sort of mean reverted. And this to me just seems like one of those obvious plays. Just got to be careful on sizing because obviously this can go higher. But, even if we go into like a prolonged downturn, recession, volatility will mute as well. So like, the VIX will go down. It just doesn't stay this high for this long.
I mean, how would you accomplish this?
There are vehicles. I think there's like a short VIX instrument that I've used before. It's like ticker SVXY. But you got to, anytime you're short using these vehicles, you got to be careful on how they actually implement the trade.
Yeah, an ETF for everything, huh?
There's an ETF for everything, but you know how some of these are like daily rebalanced, and that can mess with your results and stuff, But yeah. I think this idea is something that I want to look deeper into.
All right, let's think it all. Let's think it through, and we'll bring it back. We'll bring it back to the family when we have that fleshed out. Since we're in the ideas section, let's talk some tangible stuff. I made some moves this week. I bought a lot of Bitcoin, actually. I'm probably,
nice.
I'm probably 60, 65% allocated at this point. And also like thinking that like I might cut that pretty quickly.
Yeah, you got to be clear, I think, when you say this, you got to be clear on what your time horizon is.
Well, look, I think if your time horizon is far, then like I honestly think that you should be like probably half allocated here, because your downside is like 50K, your downside is, 30%, which is nothing in crypto land, and your upside is like a 10x, right?
Yeah.
So as you zoom out, like that risk reward it's pretty skewed to the upside. So as long as you're not levered long and just totally going nuts, buying here I think is interesting. I'm kind of curious like how this ends up aging over the next week, but like over the weekend we had this buildup, which you can see a little more clearly maybe on a lower time frame chart. But we had this buildup around this weekly low, and right here was where everybody was, including me, was remarking about like how strong crypto was, right? And then of course we get the nuke, and I posted a meme like the day before about this happening, right? And obviously it happened. So
how low did it get on that little nuke there?
We tagged 74K, which is almost the prior all-time high, right? Which I had as like a very, very key level to buy. But anytime you run a quarterly level like that, anytime you nuke a bunch of this liquidity, if you look on the lower time frame and you start seeing signs of price accepting back inside that range, of putting in some like bullish market structure shifts, I mean, you could be looking at some pretty good upside. And I think the market wants to go up, right? So a lot of this is a question of like, how much daylight will the Trump admin give? But like, even in the short to medium term, how much more downside is there with most stocks down like 30%? And Bitcoin just up greatly versus the NASDAQ showing a tremendous amount of relative strength, versus like how quickly this thing can rip back into the 90s. So I'm kind of mentally like allocating some of it for the long term, but also a lot of this for like a a swing trade. I think the crash ultimately is going to be a two-part story. I think part one is the tariffs, and then there's the relief rally on the realization that made tariffs, like after all of the pain that's been priced in, might not be as bad as people think. But then there's part two of the story, which is still this sort of like very fundamental problem with, this kind of debt air pocket we have down the road and all these other just like super ingrained issues in the world economy, which is why, everybody's talking about doing this Mar-a-Lago Accord and basically like resetting everything, right? So I think there's a trade before the Mar-a-Lago Accord. And then I think there's probably another get out of Dodge. And then there's sort of like the event that drives the Mar-a-Lago Accord. And or maybe that is this event, right? Maybe we do just drive straight into that and we're having that meeting in a couple of weeks and everything moves super, super quickly. But I think that where Bitcoin is, right, and how easy it is to get out to the downside right now versus like the upside reward, it feels like a place to be positioned long, especially because like if this does end up being like a really, really significant like bear market rally, it's going to be so painful for you to sit there on the sideline and watch this thing rally to like the 90s or like 100, or God forbid we put in one of those kind of like another like double top formation, right? Like this price action here right now, it reminds me so much of the summer 2021 price action where you have this kind of like sell off into this sort of like falling wedge type thing. Because if you look back in 2021 here, it's basically what we did, right? We had this nuke into this kind of falling wedge. And let me tell you, like right about here, people were losing their shit. Like this looked awful right here, right? Like you were sitting right here before the breakout.
That's weird.
This looked like it was going to zero, right? Like if I pulled up this chart, you'd be like,
the same as today's area.
I know. And history doesn't repeat, but it often does rhyme. So I sometimes like to just position at these inflection points just to avoid getting caught with my pants down if stuff goes the other way and just feeling like I have to force myself into an entry. Yeah, I've been like a huge buyer. I got a lot of size in kind of in the high 76s, nibbled a little bit at 80 and obviously underwater on that from the weekend, but deployed a lot in the 70, high 76 range in Bitcoin. And I think crypto in general is kind of an interesting trade here because crypto tends to front run everything, right? Like crypto died way before the stock market did. And it's probably going to come back way before the stock market does. And if you pull up some of these alt charts, like, well, I think a lot of them ultimately will end up lower. Like many of them are trading at very interesting levels after having just nuked like ungodly percentages, Like I'm not long Solana, and I don't know if I'm going to take a position in Solana, but Solana is probably a good example of this because you basically had this just insane move, right? Percent basically straight down.
Wait, Solana went down to double digits? Is that what I'm seeing?
That's right. The prophecy was achieved. Double digit SOL. But you're looking at an asset that's down like nearly 70%, right? That's just swept like a massive amount of liquidity in like this kind of pretty juicy zone. And if you just think about stuff in terms of ranges, right? High and a low and price just going to the mid range of your high and your low, which is just some basic stuff. I mean, for something like Solana, that's a 100% move for mean reversion.
Yeah.
Right. And these are the types of moves that trap people because they're sort of thinking in absolute terms like, oh my God, it's up 100%. The bull market's back. But like 100% doesn't mean anything in isolation. Like, where's it coming from? How big was that range to start with? Like, you get a range like this, and 100% move is just a mean reversion bounce, right? But one man's mean reversion bounce is another man's like super, 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 super juicy trade. And if there is a relief window, like you bet your ass some of this crypto shit is like absolutely going to go on a freaking tear. And the risk reward of shorting Solana in like the double digits right now is just not good. Could it go lower? Sure. Anything is possible. But like, where do I want to be, long or short? Like if I had to pick a side, like I want to be long. And if there's an asset class I want to be long in, it's not stocks, it's crypto. Like if I'm going to take shorter term trades, because if the selling is over, it's going to be over in crypto first. And if the selling is over in crypto first, within crypto, it's going to also be over in some of the shittier altcoins first, right? Because much like people sell their crypto before stocks, well, people sell their Solana before they sell their Bitcoin. They sell their dog with hat before they sell their Bitcoin, right? So even within crypto, you have a bunch of stuff that is probably looking really, really juicy. And we could go here for a long time, and I could pop up like a bunch of juicy charts. But I'll give you one more for the fam. And this is Hype. You're familiar with Hyperliquid, right?
Yeah, the trading platform.
Yeah. So I bought a bunch of Hyperliquid 1040. Told the Discord the other day. I mean, still pretty close to the entry price. Hype is a really interesting one for me. I mean, the entire chart is basically framed around like one monthly candle at this point. It's a pretty new coin, right? So it's the December monthly candle. It's this candle here. We just took the December low, December high sitting up here, $35 or so. Yeah, $35. So this is sort of like the price history for Hyper. So kind of a bottom of a range type deal from a price action perspective, but from like a fundamentals perspective, if you'll entertain me to be a fundamentalist for a second.
Yeah, I would love to hear some of this.
Hype is it's a great product, right? Now, I very much think we're in an era of useful applications in crypto, and like we're sort of exiting the era of like nebulous layer one value, right? Cool. How do you value Solana? How do you value Ethereum? Like,
right.
I don't know, like they're very much meme coins to me. And the Ethereum meme is obviously on a downward trajectory. And even the Solana meme, I don't think is that good, because if you pull up a Solana Bitcoin chart, you're like, why the hell would I own Solana over Bitcoin? But stuff in the application layer looks interesting. And Hyperliquid is the app I use most in crypto. It is a well-built app. It is something that I use, even though I have a centralized exchange that I trade on, I still find a lot of utility in trading these sort of on-chain perps. I know a lot of other people do as well. This is going to be so much more than just an exchange in the future. It's kind of like its own layer one. We now have spot Bitcoin on Hyperliquid. So we're going to have all these spot assets on here as well. People are going to be building applications on it. The nearest comp in crypto is probably Binance. Binance probably worth $60-70 billion. I think Hype is trading at about a $4 billion market cap right now. So we're like a 12, 13, 14x or whatever from Binance levels. But the interesting thing about Hype is that it has a buyback, right? Like a lot of the problem with crypto tokens is that these tokens, they don't mean anything, right? Why does the token go up? There's no revenue. It's just, oh, you have governance rights? Like, who cares?
Yeah, there's no equity ownership in the protocol.
Yeah. So the Hyperliquid buyback is like one of the closest things we have in all of crypto to just straight up equity, right? It's a beautiful thing. And if you crunch the buyback numbers, right? If you look at the trading volume on Hype, like what you see is that depending on the estimates you make, I mean, we're 2 to 5 years from buying back the entire supply, right? Which is okay.
That's really good. That's really good.
So if you put some modest, sorry, I didn't mean to interrupt you there.
I have PTSD on all the, like, doing fundamentals on crypto is something I was super interested in this, like back in 2019 or 2020 when I started. It just, there's too many examples of like GMXs or Uniswaps or what have you naming them all. And this is what I was describing earlier when I said, like, I'm very happy buying cash flowing companies. I'm very happy buying Bitcoin, but like as we step further on the risk curve, I just don't know that I like holding this stuff.
This is a cash flowing company. And I would argue that like you probably can't find me any example of a TradFi multiple gone wrong in crypto that wasn't just people just completely fucking bastardizing the TradFi multiple, right? Or you have stuff where like, you know, I remember like Aave back in the day, people were like valuing it on like a PE and they were like, oh, this must be wrong because the number's just way so high. So it's probably different in crypto. But like everything we said that about, the price just came down. The price just came way down.
Yeah, that's my PTSD talking.
Yeah. And Look, it's obviously a warranted concern, but like, what is the point of buying anything that's like a non-commodity? Like, if it doesn't have cash flows, like you're buying a meme coin or you're buying cash flows. You know, and I guess in the TradFi world, we have these like hybrid meme coins / cash flows. You get your Teslas and whatnot. They're basically meme coins, but also like have, you know, something attached to them. But I don't know. Like I think that the future of crypto is a future of cash flow generating apps. And
Agreed.
I think the sentiment you're sharing is probably why some of this stuff is just going to be like very, very bargain basement, right? Because people have that sentiment, or they're people in the space already have that sentiment, or they don't have any money. And then people outside of the space like haven't really caught on to that yet. Right. But that's what you want to be. You want to be early to something. And part of the pain of being early is that sometimes you don't know how early you are. And
yeah, I agree. You're right. I think you've identified like a market inefficiency, and that's where you make a lot of money.
Mm-hmm. But yeah, I mean, like if you want to kind of put it, just there's all sorts of TradFi metrics, multiples, whatnot that you can put on Hype where you get like a $50 token price, and it's not a crazy stretch at all.
Damn.
And
I wish I had the energy and enthusiasm to dig in, but like that's long gone. That left in like 2020.
Well, you could just hijack my conviction, I guess.
Yeah, I'll rely on you. And if anyone else in the Discord
lazy.
wants to bring any metrics, I'd love to read them.
Yeah. So I've got this alongside Curve in my portfolio, which we've talked about. Curve has honestly been like, you know, you want to talk about a coin that's been looking pretty good at these levels. Stark contrast with the Ethereum chart, right? Like if I pull up the Ethereum chart, you're just like, yep, that thing's still going to triple digits, right? But like I pull up a Curve chart and it looks like something that is in a bottoming process, right? Where the sky is the limit as opposed to there's a bottomless pit in front of you. So that's kind of basically my crypto portfolio at the moment. Is I've got Bitcoin,
Curve,
and I've got
Bitcoin,
Hype, and Curve, and then I'm still like a fart coin enjoyer from time to time because it's just one of the best assets to trade in the entire world. Like the movements are amazing. And as I heard somebody comment today, like one of the funniest things about the asset is it's like the only exclusively retail asset like on planet Earth that has like this sort of volume and movement, because like there's nobody's
serious about that.
Nobody's going to buy fart coin, and if they lose money, because if they lose money, they lose their job, right? You can explain that to your boss. Like it's just not happening. So it is this just pure retail phenomenon. It's like a pure retail sentiment indicator. So it's kind of interesting in that regard. And it trades clean. And it gives big moves. And like, dude, like if I pull up the chart right now, I mean, like the Fartcoin S&P chart is looking pretty solid. I have too many names on this thing. My God. It's just not going down, baby.
Look at that.
Strong looking chart. S&P's down like 30%. No problem.
That's crazy.
Doesn't care. Doesn't care. I mean, when we're tariffs were Tuesday. We're up. Wow. We're up money. Fartcoin is up currently from the tariff annihilation announcement. So
weird. Make
of that what you will. I'm still hoping to get back in on this, kind of in the 30s. I would like another chance at an entry because this is my my full retard coin, if you will. Sorry, I heard we can use the R word again now, but I gotta use it to convey the message. Like if things get turbo stupid again, this is the most turbo stupid. This is.
That's a great line.
Again, sorry. I don't mean to offend the audience, but you get the point I'm trying to convey here. So that's your crypto portfolio. You got your Bitcoins, you got your Hype, you got your Curve, and you got your Fart. And I think it covers all the bases. Covers pretty much all the bases for now. I'm sure a new thing will crop up at some point that we gotta get exposed to, but I feel pretty good. Feel pretty good like this.
That's good, man. I like that. I'm gonna stick to some more like high probability names. I'm looking at like Palo Alto Networks and CrowdStrike. You know, just like things that people are gonna need. Like businesses are still gonna need security. It's a PANW,
Misclick.
but Palantir is kind of like a Freudian slip because that's like probably going to go higher too. But this is just like a up only technology, I think.
It's an interesting spot for it here at your range lows. It's an interesting spot. Been saying that a lot this week. Interesting spot. It's an interesting time. Interesting spot. Yeah, I mean, I wouldn't hate you if you bought this here. It's like 30% off the high. I mean, 30% off is it's a good deal for a good company. You know, there's very few examples in history, I think, where you take a good company, you buy it 30% off, and you're feeling bad like years down the road. You know, which is what you got to have in terms of a time horizon on stocks, anyway. So, does look like we could probably flirt with that 200 week at some point, but
oh yeah.
I mean, you could see a scenario where we're kind of like late 2025 here, the 132 level, and we got the range low and the 200 week, and that's pretty juicy. Nice. By the way, guys, like if you don't know TA or anything, you know, just slap a little 200 week moving average on your chart
and buy there.
Stuff hits that, and it's a good. The caveat here is like it's a good company, right?
Right.
Because if it's a bad company, it'll just hit it, and then it'll go to the 300 week, and then the 4, and then it'll go to zero.
Go to zero.
But if it's a good asset and it tags the 200 week, I mean that's a magic. It's a magic level for the most part in most anything. Very famous in Bitcoin. Very famous in Bitcoin. Where's the 200 week in Bitcoin these days? It's kind of like my oh shit level. Currently sitting at 50K.
Oh.
Yeah. So I mean, if we get a really bad end of year, I mean, that would align with kind of what I hope is worst case low 50s back to the 200 week. So yeah, I got to be mentally prepared for that. But for now, I think risk is to the upside. Risk is to the upside. One tweet. We just need one tweet.
Yeah, Eric, baby.
And we rip.
Love that.
But yeah, stay away from the leverage, guys. If you don't know what you're doing, you're going to get annihilated in this environment. Zoom out. Start buying at these generational levels. Buy a little bit. Just dip your toes in. See how it feels. Get a little bit allocated. You know it's probably not going to be the bottom, but get that shopping list out. So many things you probably wanted to buy for the last, I don't know how many years, and it's time now. It's a glorious time. The great accumulation is what I'm declaring the next year.
I like it.
We will ride the wave up to generational wealth together on this podcast, and I look forward to doing it with all of you.
Thanks for catching me up, dude. This was awesome.
You're so welcome, bud. Always enjoy chatting with you about the markets. A couple quick plugs before we leave. We're doing $50 a month off Magic Lines through the end of the month. Code LONG50 magiclines.xyz/IL. Check that out. You get a nonstop flood of me pouring ideas, trades out to you, if that sounds appealing, or just ignore that and watch the weekly video. You know, get those ideas, whatever. It's chill. You can try that out for 7 days free if you want. And if you're not subscribed to the pod on YouTube, what are you doing, man?
Yeah, come on. You got to subscribe.
Come on. We're logging on here. We're putting all this great content out for you.
Yeah, man.
If nothing less, it's entertaining, I hope. So yeah, please subscribe. Throw us a follow on the Twitters, Alfalfa Pod, for the Alfalfa Discord, where we've got the free money channel and the free Magic Lines channel. So if you want to pop in there, talk with like-minded degens such as myself and Eric, yeah, hop in there, say hello, and we will welcome you to the family. But that's good enough for this week. I'm going to wrap it up there. Eric, congratulations again on the dadhood.
Thanks, bud.
And I will see you on the Alfalfa podcast on Wednesday. So guys, also check that out if you're not currently listening and you want to have a couple drinks with us, get deep into the armchair, talk about all things life and whatever. We always have a great time doing that. So yeah, we'll leave it at that. Thanks everybody for listening. Catch you same time, same place next week. Bye-bye now.
Adios.